GameStop stocks have been continuously crashing over the past few days, making those who are still holding on to their shares lose millions of dollars. The WallStreetBets-fueled short squeeze isn't over just yet, but it is entering a tortuous phase after trading restrictions were imposed in some stocks and the movement inevitably started to lose traction, as retail investors could only buy a limited amount of stock shares in the platform Robinhood. The ban has shown that the platform was never concerned about small investors as it claimed to be, since it not only sold their information to big corporations, as it made sure to contend with the elite's agenda. It's no news that the stock markets are rigged, and eventually the exact same thing that's happening to GameStop will happen to the market as a whole. That's what we're gonna analyze today. So, welcome to today's Epic Economist video. Don't forget to give this video a thumbs up, share it with your friends, and subscribe to our channel to keep updated with future videos. A lesson Reddit traders are having to learn the hard way is that a stock is only worth what someone is willing to pay for it at a specific moment in time. A few days ago, GameStop stocks soared to over $300 a share, and several investors that were in the middle of the market frenzy thought they had suddenly become rich. But the thing about the stock market is that you only really make money on the way out. So those who managed to sell the stocks at the fever pitch of the bubble have indeed seen their gains skyrocket. But the remaining ones that have held to their shares have been experiencing major losses every day it passes. However, GameStop investors are determined to hold on to the bitter end, and the end will definitely be bitter. Even though their achievements have been remarkable, investing in a decaying brick-and-mortar video game retailer wasn't a logical long-term investment, and they probably already knew that. The online investor's target has always been hedge funds and short sellers, and it's safe to say that the unexpected turn they triggered by shooting up a falling stock has punished several institutional investors and shook up the market's dynamics. On the other hand, many of the Reddit raiders weren't anticipating how big the losses could be, especially after they were able to push the price of the stock to unprecedented highs. But the fair value of GameStop stock is probably less than $1, so it was just a matter of time before it started to drop again. In essence, any really tenacious group of investors could temporarily pump up the price of any stock, but for it to stay at an elevated level, there must be buyers willing to purchase that stock at that level pretty much every day. And of course, paying for an overpriced asset with no real future prospects isn't a reasonable investment plan. So at some point, things would start to crumble. But many weren't expecting it to happen so soon. During the last two trading sessions, GameStop was sent down in a dramatic fashion, with shares of the volatile retail trader favorite sinking 60% and closing at $90 per share on Tuesday. That fall comes after the over 30% drop during the regular market session Monday, after closing at $325 per share on Friday. The two-day loss total now 72%. According to data from S3 Partners, short interest in GameStop as a percentage of shares available for trading declined to about 53% from over 110% a week ago. Ihor Duzanowski, the S3 Managing Director of Predictive Analytics, pointed out that both fundamental and momentum short sellers have found opportunities and price exit points to trim their positions in the face of these losses, as the GME short squeeze is in full force. This means that, in fact, as the online traders have seen their gains wiped out, The recent covering reduced short sellers' losses in the stock to about $13.4 billion a year to date from nearly $20 billion just last week, amid the stock's remarkable pop, as recent S3 data has indicated. Multiple Reddit traders have chosen to hold on to their shares, hoping GameStop bounces back so they can recover some of their losses. But at this stage, it's more likely that the video game retailer stock prices return to a level that is much closer to fair value. That is to say, these stocks will probably keep descending from now on, and it will get much harder for them to rebound. Some investors, such as Dave Portnoy, got really thrilled about the movement the Reddit raiders had created inside the markets and started joining in when the squeeze was at its peak. But that didn't turn out as expected, and now several of those stocks have cratered. Portnoy revealed in his Twitter that he suffered enormous losses. After hours, Portnoy provided an update on his AMC, Northrop Grumman, and Naked Brand stock positions. He affirmed to have bought them at the absolute high and sold them at the exact bottom. In total, he said losses amounted to approximately $700,000. With some pent-up anger after losing so much money on what he called meme stocks, Portnoy continued to criticize Robinhood CEO Vlad Tenev on his Twitter, saying, "I have officially sold all my meme stocks. Vlad and company stole it from me and should be in jail," he wrote. "I also didn't know Vlad and company could change the rules of the stock market on a whim," Portnoy exclaimed. And he wasn't alone. Many others have also seen the value of their stock holdings experience in steep decline. Amongst them, Keith Gill, who goes by Deep Bleep Value on Reddit and Roaring Kitty on YouTube, disclosed he suffered a loss north of $13 million on Tuesday alone from his GameStop bet, but he has no plans of selling it. He was one of the main heads behind the epic short squeeze in GameStop. It was through his YouTube videos and Reddit posts that he managed to mobilize an army of online traders who cheered each other on and piled into the brick-and-mortar video game stock and call options, sending shockwaves through Wall Street. Gill unveiled he's been holding 50,000 shares of GameStop as well as 500 call options in the brick-and-mortar video game retailer since the beginning of 2021. When GameStop hit its record high last week, Gill told in his Reddit post that his total return in the stocks ballooned to over 2,000%, reaching as much as $33 million. Conversely, as the short squeeze in GameStop started to lose strength this week, a large chunk of Gill's massive gains has disappeared. In addition to the $13.6 million loss on Tuesday, he's said to have lost $5 million on Monday. And while he's still refusing to sell, and GameStop stocks are on a freefall, more losses are likely to occur over the next few days. Evidently, he's standing in this position to prove a point, and he probably has the means to afford the consequences of his choosing. But many inside the Reddit army can't say the same about themselves, and as it's getting harder to sell these stocks, unless a considerable comeback happens throughout the week, much more money will be lost. It's also essential to remember that one of the main reasons why GameStop is collapsing is related to restrictions that were put in place last week. After some major backlash, Robinhood decided to roll back the trading ban, but decided to keep a limit on the amount of shares traders can buy in some stocks. Now, Robinhood is allowing clients to buy up to 100 shares of GameStop, up from the previous limitation of 20. But those who own more than 100 shares within the platform can't buy any more shares of the stock. As soon as the trading was resumed last week, GameStop climbed off the lows, which is also one of the reasons why online traders still have hope the stock will recover. Furthermore, Robinhood raised the limits on AMC Entertainment and Express and Cost, while BlackBerry and Genius brands are no longer being restricted. The platform reported that the restrictions had to be put in place after an increase in capital requirements from the Depository Trust and Clearing Corporation in the face of the Wall Street Bets investing frenzy. The wild trading has sparked varying reactions amongst high-profile investors and other public figures. Yesterday, billionaire Mark Cuban said he didn't expect the Reddit army to go away, even after the GameStop story is over, and he blamed brokerages and regulators for not being more transparent about the potential for trading restrictions. In contrast, PIMCO co-founder Bill Gross affirmed that better transparency wouldn't have saved some retail traders from suffering from the effects of the GME stock collapse, saying, "The victims in the GameStop experiment have and will continue to be the Robinhood investors storming the gates of capital markets. Without the size, the endgame plan, and the mathematical option pricing expertise to succeed, even without regulatory action, the plan was doomed from the beginning," Gross noted. The sharp fluctuations and brokerage restrictions have received a lot of attention from politicians and regulators in Washington. On Monday, the chairwoman of the House Committee on Financial Services, Rep. Maxine Waters, announced that there would be a hearing on February 18th about the recent trading ban for GameStop stocks. Moreover, in a recent statement, Senator Josh Hawley has exposed the fact that Robinhood was never actually on the side of small investors, saying, "Enter Robinhood," as in steal from the rich. Robinhood was the trading platform for the little guy. No fees, no hassle. It was big tech, once again, allegedly democratizing another sphere of American life captured by elite control. But like the tech platforms, Robinhood wasn't really about its users. Its bread was buttered by selling the data on users' trades to the big players, the elite guys like Citadel, to give them inside tips on where retail investors were sending their money. And the Citadel guys, in turn, pay off their regulators, like Treasury Secretary Janet Yellen in their years away from government for favors when they're back in power, Hawley wrote. As the economic collapse writer and author of Last Prophecies of the Future of America, Michael Snyder outlined in a recent article, "What a crooked system we have. Our politicians will never have enough courage to actually try to change it. And of course, the so-called guardians of democracy in the mainstream media relentlessly defend our extremely corrupt system. Sadly, it is just a matter of time before the entire house of cards comes crashing down for good." The talking heads on television are preaching to us about the dangers of the GameStop bubble, but the truth is that our entire stock market has become one gigantic bubble. Indeed, the stock market has been hanging by a thread for a long time now. Doomsday predictions for an 80% correction were becoming regular amongst experts way before the Wall Street Bet short squeeze had started. This is just one of the numerous bubbles inside the market, and just as GME stock seems to be returning to its fair value, price-to-earnings ratios always return to their historical averages. Although no one can predict the exact time a crash will occur, it was set to happen regardless of the latest events. So sooner rather than later, the stock bubble will pop, and it will end badly for everyone. But we cannot say they didn't have it coming. A Zero Hedge likes to remind its readers, on a long enough timeline, the survival rate for everyone drops to zero.